Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for Monday, the 22nd of December. I'm recording the video today 5 minutes to 4 p.m. Eastern Standard Time, just a little bit before New York closes for you today. We've got more upward movement. That's pretty much what I'd expected. I now have a short-term target, which is a 1-point zone calculated at 2 degrees, so it has a better probability at 2097 to 2098. That target might be met in 1 or 2 days. That will complete a third wave, and the next movement for the S&P, a fourth wave correction, might show up on the daily chart as one or more red candlesticks or doji, or a mix of the two, with a green candlestick in there maybe, but it might take a little bit longer than the second wave correction. Overall, the midterm target remains the same at 2132. It might be met in 9 or 17 days' time. At the daily chart level, this is the main wave count. It sees the S&P in a bull market, and I'll continue to expect it's in a bull market while the trend remains the same and we have no confirmation of any trend change. This long bull market I'm seeing as a primary degree third wave within a cycle degree fifth wave. At 2191, primary wave 3 will reach 1.618, the length of primary wave 1. That's a really common ratio for a third wave to exhibit, so the target has a good probability. Within primary wave 3, there is already an exceptionally good Fibonacci ratio between intermediate waves 1 and 3, so I'm not expecting to see a ratio for the fifth wave at intermediate degree, so I'll leave the target calculated just at primary degree. Likewise, within intermediate wave 5, there is already a good Fibonacci ratio between minor waves 3 and 1, so I won't expect to see a ratio for minor wave 5 to either 1 or 3, so this target will remain the same until we get really close to the end, and I might be able to add to the calculation at minute degree for you. Minor wave 5 must subdivide as a 5-wave structure. It may be either an ending diagonal or a simple impulse. This long upward movement has so many subdivisions within it, it's absolutely impossible to determine whether it is a 3-wave zigzag or a 5-wave impulse. I think it fits best as a 5-wave impulse, so that's what I'll go with. But if the third wave subdivides as a zigzag, then we could be looking at an ending diagonal for minor 5. Because if minor 5 is an ending diagonal, all of its subwaves must subdivide as zigzags. Another reason I don't think that's very likely now is this second wave is relatively shallow compared to the first wave, and second and fourth waves within diagonals are almost always very, very deep. So this doesn't look like a second wave of a diagonal. I think we're seeing a simple impulse unfold upward for our minor degree fifth wave. Within it, at 2132, minute wave 3 will reach 0.618, the length of minute wave 1. That's the Fibonacci ratio I'm using for that target because it fits so nicely with the higher target for minor wave 3. Within minute wave 3, no second wave correction may move beyond its start, below 1972.56, and I think this second wave correction for minute 2 was more shallow than second wave corrections usually are because it was forced to be more shallow, probably by this lower aqua blue trend line. Every day in the text article, I link back to a prior weekly chart where I show you exactly how to draw this black trend channel and this double trend line. Double trend line will continue to be really important. It should, now the upper one, should show where downward movements find support along the way up. This is not an Elliott channel, it's a traditional technical analysis double trend line outlined by McGee in that classic technical analysis of stock trends, and while price remains above these aqua trend lines, we will assume that the bull market remains intact. Let's have a look at the third wave on the hourly chart where it begins down here, this point down here. I'm moving everything up here, up 1 degree, and it fits really nicely with this target, which is now widened to a 1-point zone. Within minute wave 3, we have a short impulse for minuet 1, a quick relatively deep zigzag for minuet 2. It's over half the length of minuet 1, so I'll classify it as deep. An incomplete impulse for minuet 3, which is showing an increase in upward momentum on the hourly chart at least. Within it, we have 1, 2, 3 looks now complete, and it shows its subdivisions nice and clear on the hourly chart. 4 is a triangle. It's showing perfect alternation with the form of 2 at subminuet degree, and the final fifth wave looks like it's incomplete. Importantly, this third wave for subminuet 3 is shorter than the first wave. A core Elliott wave rule states a third wave may not be the shortest. That's often misinterpreted to state a third wave must be the longest. That's not the rule at all. The third wave can't be the shortest. It can be shorter than the first wave, and when that happens, that limits the following fifth wave to no longer than equality with the third, so that the core Elliott wave rule is met. That limit here is at 2115.43. Also, this third wave shows no Fibonacci ratio to this first wave, so I will expect the fifth wave to exhibit a Fibonacci ratio to either 1 or 3. And at 2098, subminuet wave 5 will reach 0.618, the length of subminuet wave 3. That's just 1 point above 2097, where minuet wave 3 will reach 2.618, the length of minuet wave 1. Once we get the final fifth wave complete, particularly if we get up to this little target zone, that could be the end of the third wave, and the next movement for the S&P should be a shallow fourth wave correction, a choppy overlapping sideways movement, maybe a triangle or combination type of correction, which may not move back into wave 1 price territory below 2012.47. Because I'm expecting the fourth wave to be a sideways kind of correction, they tend to be more time consuming than zigzags. This little second wave is a quick zigzag. So the upcoming fourth wave correction might last longer than the second wave did. That would be expected, and so it might show up on the daily chart. The target for minute 3 remains the same as explained on the daily chart. Draw this small channel using Elliott's second technique around minuet wave 3. When this lower edge of this orange channel is very clearly breached by downwards movement, not sideways or upward movement, but downward movement, that may be the earliest indication that minuet wave 3 is over and minuet wave 4 has finally arrived. We're not there yet though. At the daily chart level, this is the wave count for the bear wave count. The subdivisions within primary ABC are seen in exactly the same way as for the bull count for primary 1, 2, 3, because 1, 2, 3 and ABC both subdivide 5, 3, 5. So the targets, short-term structures at the hourly chart level and expectations are exactly the same. These wave counts will not diverge until this fifth wave again could be over. And that's all from me today with your S&P analysis, and I hope that everyone's looking forward to a fabulous holiday.